In the second video of the series, we broke down the key players behind the lending process, showing you the huge impact they have on getting a mortgage loan. But now it's time to talk about the one person who holds the fate of your loan in their hands. Because if you get this part wrong, it won't matter what home you choose or what rate you lock in. Your deal could fall apart long before you ever get the keys. Buyers think the lowest rate is all that matters when choosing a loan officer, and at face value, that makes sense. But here's what most people don't realize. The wrong loan officer, even with an amazing rate, can cost you time, stress, and even in some cases, the home itself. A good loan officer isn't just someone who gets you the lowest rate. Although that is very important, it's not the full picture. To really make a difference in your home buying experience, they have to hit 5 critical criteria. Miss just one, that amazing rate won't matter when you're scrambling to save the deal. And the first criteria, strong relationships with the key parties involved in your loan. In my experience, a great loan officer just doesn't understand the process. They have strong relationships with the underwriters, appraisers, and everyone involved in getting the loan approved. Because in this business, who you know matters. I've watched deals fall apart, and I've watched great loan officers save them. This is one of the reasons why we always prefer working with mortgage-focused lenders over big banks. And here's why. Big banks, they're massive. They make it nearly impossible to build real relationships. Their systems, rigid, their team, too large, and their files, they get passed around between departments like a hot potato. I've seen loan officers at big banks completely stuck, no direct access to underwriters, no way to push the file through faster, no control over the process. Instead, they're submitting documents to a system, waiting for a response and hoping for the best. And that disconnect, it leads to delays, miscommunication, and even unexpected denials. Most loan officers start their career at big banks, but in my experience, the best ones eventually move to mortgage-specific lenders, banks that specialize in home loans. And when they make that shift, the difference is night and day. Because when a loan officer has direct, established relationships with an underwriter, they can anticipate what's needed, package a file properly, and avoid potential issues before they happen. Same thing with appraisers. I've worked with loan officers who could tell me based on their experience whether a property was likely to appraise at the right value before we even made an offer. That level of expertise, it's saved my clients from deal-killing surprises, and in many cases meant the difference between getting the loan or walking away empty-handed. But strong relationships aren't the only factor, because the next thing that matters, their production numbers in the area you are buying. The truth is, a small percentage of loan officers handle the majority of loans in any given market. It's something like 5% of the top loan officers close 95% of all the deals. And that is a game changer, because top producing loan officers don't just close more deals, they work with the same agents, lenders, and decision makers over and over again. And in real estate, it's not just what you know, it's who you know and how often you've worked with them. If my team doesn't have a direct relationship with the listing agent, chances are our loan officer does. And that familiarity, it can make all the difference. I've seen multiple offers where everything looked the same on paper. Same price, same terms, but the listing agent and seller still felt more confident going with a buyer who had the lender they trusted. Why? Because a trusted loan officer, one with a history of closing on time and avoiding surprises, makes the deal feel safer for sellers. And in a competitive market, sellers want certainty. That's why having the right lender in your corner can be the edge that wins you the deal. Just a reminder, we put together a custom Who's Who guide that breaks down all the criteria I'll be covering. You can download it anytime by clicking the button below or message us Who's Who right now. High production numbers won't mean much if the loan officer doesn't know how to navigate challenges. And that's where the next criteria comes in. Experience, systems, and proactive problem solving. Loan officers who close a high volume of deals aren't just well connected, they've seen it all. And that experience is what helps avoid costly mistakes. They've worked through hundreds, sometimes thousands of transactions, and they know exactly where a deal tends to fall apart. and how to stop those issues before they ever even happen. That's what separates an easy closing from a total nightmare, because I've seen what happens when buyers work with an inexperienced lender. And if there's one complaint I hear more than anything, it's that the process feels chaotic. 1 minute, everything seems fine. Then suddenly, last minute requests come in, deadlines get pushed, and buyers are left stressed and completely blindsided by problems they never saw coming. But when a top tier loan officer is handling the loan, the process feels effortless. Not because it's easy, but because they've already anticipated every possible roadblock and handled it before you even knew there was a problem. The best loan officers just don't grind through problems, they prevent them before they ever even happen. They have proven systems, an organized team, and a structured communication to make sure nothing gets missed. And when things do go wrong, which happens in real estate, they know how to fix it before it ever affects you. It's crazy how even a few days of closing delays can completely disrupt a transaction. When one part of the deal is delayed, it sets off a ripple effect that impacts everyone involved. Here's what that actually looks like for buyers. A seller who's buying another property might be suddenly stuck with paying 2 mortgages because their sale didn't close on time, losing money every single day. Now the question is, who pays for this? It's not the seller's fault, and that frustration can quickly turn into a slippery slope of stress where they refuse to give extra time, putting their deal at risk. A buyer moving from a rental, they could find themselves without a place to live if their lease ends before closing. I've had buyers forced into temporary housing or stuck paying expensive daily rental fees just because their lender wasn't on top of deadlines. Rate lock extensions, penalties, last minute lender conditions, these all can cost thousands, or even worse, can kill the deal entirely. I've worked with loan officers who knew exactly what was needed at every stage, keeping everything on track without surprises. And I've also seen what happens when a lender drops the ball, buyers scrambling, sellers frustrated, and the deal hanging by a thread. A great loan officer isn't just racing against deadlines, they're setting the pace. And that difference, it can save you money, stress, and in some cases, your dream home. Which moves us to the 4th factor in choosing a great loan officer: competitive rates. Most buyers assume the lender with the lowest rate is always the best choice. And yes, rates matter, but as we've established, a low rate is just one piece of a bigger puzzle. I'm going to break down how rates actually work, the sketchy things some lenders do to make theirs look better, and what you actually need to watch out for. Let's get into how mortgage rates are really set. While the Federal Reserve doesn't set mortgage rates directly, its policies impact how expensive it is for banks to lend money. Since all banks pull from the same market data, their rates stay relatively close. And that's key because most lenders start with the same baseline rates. So what's the real difference? It's not just the number, it's how they structure the loan. While lenders can't change the starting rate, the right lender can structure your loan in ways to save you money. And this is where some lenders get sneaky. One trick, buying down the rate. This means you pay extra fees up front just to make the interest rate look lower. Sometimes it makes sense, but many buyers don't realize they're paying more just to see a similar number. Another trick, advertising the lowest possible rate, but when you apply, they hit you with extra fees, stricter rules, or worse loan terms. And by the time you find out, it's too late. And oh my gosh, I've had clients impacted by this, and let me say, it's not a fun experience. So what really matters when choosing a lender? Since most lenders start with the same rate, a tiny difference won't impact your loan nearly as much as other factors. Here's what actually makes the difference: fees and closing costs. A lender may advertise a low rate, but make up for it with hidden fees. Loan programs. The right lender find the best options for your situation. Speed and execution. A great rate means nothing if your lender can't close on time. But here's the bottom line. Rates absolutely matter, but they're just one piece of the puzzle. Now, the final criteria: trust in the loan officer. We've covered the 4 key factors that make a great loan officer, and now we're down to the final, and arguably the most important: trust. The reality, loan officers don't have the best reputation. They deal with huge amounts of money during one of the biggest milestones in someone's life, meaning they hold a lot of influence over a home buyer's finances and overall experience. And while we aren't lenders, we've been in this business long enough to know who consistently delivers and who doesn't. Trust plays a critical role in choosing the right loan officer because at the end of the day, they're handling one of the biggest financial transactions of your life. The loan officers we refer and use ourselves didn't just show up one day. We've seen them in action. Many times buyers bring in their own lender. If that lender does an amazing job, checks all the boxes we've covered, and proves themselves repeatedly, we take note. If they continue to perform over and over and over again, they earn a spot on our referral list. But earning our trust doesn't mean they get a free pass. We hold them accountable every transaction, and this is why that matters. As a real estate agent, my role isn't just to find the right home, it's also to understand the lending process just as well as the lender. That way we can keep them on track, call out issues before they become problems, and make sure they're delivering on what they promised. Because trust isn't just about having a good reputation, it's about consistency. That's why we trust, but always verify. If you're looking for an amazing loan officer who checks all 5 boxes, we'd love to connect you. You can also book a call with me directly to see if you qualify for a home buying planning session. This is where we map out your best path to home ownership. In the next video, we're diving into a role in the buying process that's been shaking up the California housing market. And I've seen one wrong move in this area take buying a home completely off the table. Click over to the next video now to find out what's been destroying home buyers' dreams.